This is the weekly analysis video for July 21st, 2013. The market is currently closed. You'll notice here the very last candle, that's the Friday close. The very next candle will be the Sunday open. And we're looking at the 30-minute time frames. We're starting off with the pound dollar. We're going to try to identify any potential trade setups when the market opens. And the first thing I'm going to do with the 30-minute time frame is try to identify the previous day's high and low, and then look for a possible HL30 trade. Now remember, with the HL30 trade, we want to trade it in the direction of the trend. It is possible, of course, to trade it opposite the trend if there is a move in place that could as you see here, there's some kind of a trend that took place back on Thursday. You get that double bottom there, and then it moved back up on Friday. And if Friday, or the resistance, is overall major resistance, or a technical support or resistance level, depending on which direction you're trading it in, it's possible that you could trade it the opposite direction. So please keep that in mind, that you're going to always do better trading any technique in the direction of the trend. It'll usually work a lot easier. The move will be a lot smoother, meaning that there's less resistance or less pullback in most cases. It's not always the case. And then you also see a move that could potentially move a little bit further than you expect if it's traded in the direction of the trend. So here is Friday's high, and here is Friday's low. This is my resistance and support that I could potentially trade an HL30 inside of this range. So with Friday's high there at 1.5281, it depends on what the next candle does when the market opens. It needs to go up to or approach that 10 pip range and then print a reversal signal candle. Now again, here's Friday's low. I personally would rather wait for price to approach the low and then bounce off of it. It could take, during the London, New York session, it could take quite some time for that to actually happen. But it does happen, and that's usually the best trade, or the best way you're going to get results that just that provide a little amount of resistance. You really don't want to get into a trade that doesn't sit right with you, that you're worried about it. If you're worried about it, you may change the entry or the exit. You might change the parameters. You change the dynamics of the trade. And that's really what you want to do, is find a system that you can repeat over and over again. Again, that's not to say that we can't trade an HL30 off of resistance back down here, because we're only expecting a 20-point move. In other words, with the HL30, I'm just looking for a 20 pip target, and I'm using a 20 pip stop. And if it reaches the first 20 pip target, then I would potentially look for another 20 pips from the entry. So from the entry to the final target on that one would be 40 pips. You can watch the videos exactly how we trade that HL30. So I don't want to confuse you, but it is a 20 pip target, 20 pip stop on the initial entry signal candle. So it is possible. This is quite a range here. So it is possible to trade it in there. Just do it very carefully if you see that setup. Here's the euro dollar 30-minute time frame. Let's go with Friday's high here in the euro dollar and Friday's low with the euro dollar. Again, 30-minute time frame. Now this one's a little bit different. This one's different than the previous trade, or the previous chart that we just looked at, which was the pound dollar. Again, this is the euro dollar. This is different because if I tighten these charts, if I bring it in one more, you'll notice that with Friday's high, there is a high on Wednesday and there's a high on Tuesday that sort of printed that double top there. And it's possible that we could see an HL30 off of Friday's high when the market opens, but then it might spike back up and retest some of these highs from last week, and it would stop me out if I was using that 20 pip stop and that looking for that 20 pip target. But then it might eventually still come back down during the New York or London session and still come back down to support. So it's not as reliable when you try to trade an HL30. Yes, I look back at the previous day's high and low, but if there's a high or low 2 or 3 days prior to that that's pretty close, it's possible to see price retest any one of those resistance levels one more time before dropping, and that would make this trade less reliable. So it's just not a place that's the most optimum location for me to try and place a trade like that. So let's go with the dollar Canadian, see if there's any difference here. The dollar Canadian, here is Friday's low, here is Friday's high. Now it's possible that it'll come back down and test that support level, and you'll notice over here on Wednesday There's Friday, there's Thursday, there's Wednesday. Wednesday, there's another spike low. So that sort of solidifies, at least relative to this time frame, this support level. It doesn't guarantee that it's going to hold, but it adds to more support here because it's been approached or hit multiple times. So let's tighten this in one more and see what else is available to us. We notice that it's also been approached last or the prior week a couple of times. So it could be a pretty good level to trade in HL30. That would be an HL30 or a bounce off of support back up. Again, 20 pip target, 20 pip stop. I don't have the signal candle just yet, and I have to take into consideration Friday's low, which is 1.0354. Price needs to approach that within that 10 pip range and then print the reversal candle. It's possible. So let's keep an eye on that. Here is the Euro Yen 30-minute time frame. Now obviously something was happening here with the Euro Yen just before the market closed, something that was affecting the yen. And we're going to go with Friday's high here. That was the original high, but this is the close. That's the high. So I have to go with the overall high. There's Friday's low. At this moment, I'm not really sure what's going to happen because it sort of printed another type of trade that I look for, which is called the continuation breakout trade. We'll talk about that in just a moment. So this is resistance. We'll look to see if there's a possible HL30, but I would prefer not to if there was a solid confirmed continuation trade to trade it to the upside. I wouldn't trade it down even if I got an HL30 against that trade. Let's take a look at the pound yen. This is the pound yen. That's Friday's high originally. So that's the first point. Now we've got to take into consideration that last candle on Friday. There's the high. There's the low. Again, excuse me. Again, if it printed a continuation signal candle to the upside, I would not trade an HL30 back down. It's possible the HL30 could work and trade it opposite back down, but I would prefer not to. I would rather wait and trade the original or the prior trade that's already in progress. Here is the dollar yen, and you'll notice something interesting here with the dollar yen. That's Friday's high, that's Friday's low, and price did not take out the high that was set in place earlier in the day on Friday. So that could be a warning signal that even though we see these candles here on the pound yen and the euro yen closing or breaking pretty high, they might pull back significantly or stall if this cannot break out of this range, and if the pound, which is what we're looking at now, the pound dollar or the euro dollar, continue to just move sideways or flat. That might be a warning signal. Now let's take a look at the 1 hour time frames, and we'll take a look at the pound yen and the euro yen to see if those are confirmed continuation signal candles. Well, there's a resistance point, and there is a candle that shows, for the most part, no divergence other than the MACD histogram. So we've got to be careful. We've got to take a look at the larger time frames. But let's tighten this up one more time to see if there's anything over here to the left that might provide some resistance. So far, really nothing at that point. Let's take a look at the euro yen. The euro yen does the same thing, prints that continuation signal candle, Bollinger Band separating. Again, that slight divergence here in the MACD, which means this whole thing could sort of slow down and then we could see a significant pullback. Let's go to the larger time frames for the pound yen and take a look at the daily and the 4 hour charts. So with the daily, we get a lot of different technical signal or patterns in here, and we're still overall inside of this range, which looks like this to me. There is a small support level, there's resistance. So price could obviously come back up and test resistance back from, I believe it was May and April, late April and May. It could possibly test some of those levels, but at this point it's sort of in the middle of this overall range, and I would be really careful with it. Here's the 4 hour time frame. 4 hour time frame, it's pretty choppy in here. We've got some pretty significant resistance levels. Here was one, this is another, and here is yet another. So we've got to be careful. And then we've got the ones back over here to the left. Any one of these points could create some resistance. This looks a little more choppy to me, even though I see the signals. So I would rather wait until price reaches support and trade a bounce up if that's the direction. This is a 4 hour time frame. You can see that there has been a trend in place for last week. Clearly you can see it here on the 1 hour time frame. Some pullbacks, but they're still making higher highs and higher lows. So if this is the direction it's going to continue here on the daily chart back up to overall resistance. I would rather wait for an HL30 for price to come back down and bounce off of Friday's low and then trade it back up, or wait for a solid move down here where I can measure with Fibonacci retracement, the Fibonacci retracement tool, to identify the depth of that pullback. This is the pound yen. And then going back to the euro yen, this is the daily chart. Let's take a look at the daily chart. Daily chart looks a little bit different. There's quite a bit of choppy activity here, but I still have some solid support and resistance levels in place here that are holding so far. This is a daily chart. This is one of the most last significant price swing highs, and I still continue to see this double bottom here, or at this 50% retracement holding. There is, again, overall resistance back up here. That is and occurred May 22nd. So price could obviously test and hit that. But how soon and how deep is the pullback? That's what I really have to be careful with. This is the 4-hour time frame, and then back to that 1-hour time frame. So it looks choppy. It is in an uptrend, higher highs, higher lows, but I would wait for a bounce off of significant support and trade it in the direction of the trend rather than just jumping in at this point and hoping for the best.